What's up, guys? Good evening. Welcome back. Welcome back to another live streaming. I hope you guys are having a great day. We had another red day across the board today, guys. Once again, the Bulls cannot take a break. Let me see if we are actually live. Let me make sure. Yes, we're live. So, what are you guys doing? Let's go over some stocks. Let's talk about what happened today in the markets, and most importantly, let's try to um, figure it out. Let's try to guess what might be happening in the markets in the upcoming trading sessions. Red day across the board today. Russell 2000 went down 1.41%. The Nasdaq went down 0.60%. The Dow goes down 1.11%, and the S&P 500 went down 1%. And mind you, guys, if it hadn't been by Apple and Tesla, we would have gotten a worse scenario when it comes to the major indices. Basically, Apple and Tesla and Amazon also did the heavy lifting today, but other than those three stocks, we saw a lot of weakness in the markets out there today, and we had a very poor close. So, despite the fact that the major indices are a bit over sold, very oversold actually, not a bit, they are actually very oversold, we might still see more downwards pressure throughout this week. And mind you, guys, out of all the weeks of any given year, this is the worst week for the Bulls by a long shot. So the Bulls have everything against them. And is tomorrow going to be a turnaround Tuesday? We will talk about that as well. Crude oil goes down 2.88%. The Dixie, guys, the US dollar is on an absolute tear. The British pound fell to its lowest level since 1985 today. If you guys take a look at the chart of the British pound, it looks like a meme stock, or it looks like a shit coin, like dropping very aggressively. And while the US dollar keeps on going higher, guys, along with the yields, the 10-year Treasury yield and the 2-year Treasury yield, we might still see more room to the downside, despite the fact that the markets are oversold as of now. So, given the fact that the Dixie went up today, I have a chart of the Dixie over here. Yeah, the Dixie went up today 0.81%. It hit a new multi-year high. So the fact that the U.S. dollar went today obviously put commodities and precious metals. So gold went down today 1.56%. Silver went down 3.04%, and the 10-year Treasury yield went up today 4.90%. Absolutely unbelievable. Take a look at this, guys. Let's do this. Let's talk a bit about macro. So take a look at 2-year Treasury yield. Check this out, guys. This is the reference. This is the main point of reference for the Federal Reserve. So whenever the Fed fund rates are below the 2-year Treasury yield, we can say that the Fed is behind the curve. So the 2-year Treasury yield closed today at 4.34%. And as you guys already know, the Fed fund rates are sitting as of now at 3.50%. So obviously, the bond market is sending a clear message to the Federal Reserve like, hey, you are way behind the curve. And take a look at Fed futures. So, what are the markets thinking about the next Fed meeting, which is going to take place on November 2nd? The markets are discounting a 71% likelihood for a 0.50% or 50 basis point hike to be carried out or to be announced on November 2nd. So, November, guys, this is almost like we can say that 1 month out. If the Fed happens to hike rates by 50 basis points, they are still going to be behind the curve relative to the 2-year Treasury yield. So, what does that mean? That the bond market might keep on telling the Fed, you are behind the curve, so I might keep on going higher, and that is going to put more downwards pressure over the indices, stocks, and so forth. So this is something that you need to keep also in mind. Take a look at the Dixie group, guys. Take a look at this. So this is a 4-hour chart. Let me pull up here a weekly chart. Take a look at this beast. So today, the Dixie, guys, hit a level that we haven't seen since 2002. 2002. And I have told you guys plenty of times that the Dixie is inversely correlated to the stock market. Obviously, the Dixie is showing that the Fed is being very aggressive when it comes to its monetary policy. So if the Fed has a very restrictive monetary policy, the US dollar goes higher and higher and higher and higher. And obviously, since 40% of the revenue that is made by the companies that are publicly traded here in the US comes from abroad, then obviously this is very bad news for the markets. This is signaling that we might still see a deeper process of of multiple compression in the market. So you have to keep a close watch on the Dixie every single minute, guys. As every single minute passes by, you need to keep a close watch on the Dixie. If we happen to see the Dixie pulling back, this might be sending a signal from a mechanical standpoint that we are about to see a relief rally. So, what's my advice about the Dixie, guys? Do not take trades without monitoring the Dixie. Just don't do it. This has to do with the basic mechanics of the market. So if you are about to take any given trade on Apple, Tesla, you name it, uh, any given stock out there, and you see the Dixie DXY, as you guys can see over here, the ticker symbol pulling up, so you have to stop, and you guys have to try to start uh, to take trades whenever you see the Dixie pulling back. Okay, that's an advice that I wanted to tell you guys. And take a look at this other monster guy, the 10-year Treasury yield. Unbelievable. Check this out. I am going to pull up here the 4-hour chart. Please, guys, drop me a comment down below if you want me to go over any given stock. Let me know. Tesla, Apple, Microsoft, you name it. Just let me know. And as soon as I end the summary of the action that we saw today in the markets, I am going to start to go over the stocks that you told me to. So 10-year treasury yield goes up to the 4.90%. This is a shit show, basically. Let me pull up here the weekly chart. Take a look at these guys. So the 10-year treasury yield, if it happens to pull up a bit more, so if it happens to hit 4%, this index is going to be hitting a level that we haven't seen since 2010. And you guys know that the 10-year treasury yield is basically an inflation indicator. So it is inversely correlated to growth stocks, tech-oriented stocks, and higher multiple stocks. So if we want to see a turnaround Tuesday, if we want to see the markets having some sort of rally or some sort of green day, we need both the 10-year treasury yield, or TNX. Here you guys can see the ticker symbol, and the Dixie, the DXY, the US dollar pulling back. If these two factors don't coincide, forget about a green day, guys. Forget about a green day. So we are basically going to be buying, keep on buying puts left and right in order to make some money in the markets. So watch out for these guys. TNX, let's see if it ends up filling this gap up to 4%, and the DXY. Let me show you the gap that I am thinking about, the Dixie. And by the way, let me show you these guys. I'm going to pull up here a 1-day, 1-minute chart. I'm thinking there is a very important level over here, 113.13. Okay, put it down on a sticky note. I'm thinking that if the Dixie happens to pull back tomorrow, and if we see this support at around 113.13 or 113 even, we can say. So if this support happens to be broken to the downside, this might imply a relief. This might imply that we are about to see some sort of turnaround Tuesday or relief rally in the markets. Keep this in mind. If we take a look at the sectors, the 11 sectors of the markets, you should know it. You should know them. You should know the 11 sectors of the markets. We had for the most part, a red day across the board, other than consumer staples, which happens to be a defensive sector. This sector went up. This was the only sector that was able to pull off a green day today. Goes up 0.07%. And other than consumer staples, red day across the board. The three most important sectors of the markets, guys. The most important one, obviously, technology goes down today 0.70%. This sector could have dropped way more if it hadn't been by Apple, Tesla, and Amazon. Another very important sector that moves the markets a lot, guys, the financial sector goes down 1.58%, and healthcare goes down 0.95%. Very ugly day out there. And take a look at these, guys. The advancers and decliners distribution. Today we had 4,859 stocks going down and 1,892 stocks going up. So very nasty day out there. And for the most part, when we see any very, let's say, inclined ratio to either the upside or the downside, the next day the opposite happens. So I'm not saying that we are going to see a turnaround Tuesday necessarily, because today we had a very nasty ratio between the advancers and decliners of the trading session, but we are oversold, so we might end up seeing a relief rally sooner rather than later. Keep in mind, guys, that tomorrow we are going to have new home sales. That's a report that comes out tomorrow. And keep also in mind that on Friday we are going to have the PCE, the personal consumption expenditures. This is an economic report that the Fed minds a lot, that the Fed is going to be listened to, the Federal Reserve, and what we are waiting for is an increase month over month of 0.1%, and we're going to see, that's the PCE, the regular report. We also have the core PCE, which is even more important for the Fed. We are expecting the core PCE to come out at 0.5%, which is very bad news inflation wise, because that implies, if you guys do the math, so 0.5% times 12, we are having a 6% annualized core personal consumption expenditures. So very bad news, regardless, from an inflation standpoint. So those are the most important reports that we are going to have access to throughout this week. So let me see over here. Oh, what's up, King Bruno, Quality 5S. Hey, Mario, what's up? Good afternoon, good evening, sorry. Cape Cod Mama. Oh my God, I have just lost so much. It's so very depressing. So you have a bunch of losing positions. Um, you have to do the math. You have to ask yourself if the losing positions that you are dealing with as of now, you have to ask yourself, are these stocks going to come back? If you don't see a real chance of those stocks to come back, you can take a loss and move on. Or if you believe that those stocks are coming back, maybe you could be selling cover calls. Bean stock, let's go over it. OJ. There you go. And AMD support. Okay, let's go over some stocks over here, guys. I can tell that you guys don't have any questions about macro. Mario is the king of macro, even though he denies it. Okay, AMD, what is going on over here? Let's go over advanced micro devices. Very ugly day for the semiconductor stocks. So AMD went down today 2.44%, Jesus Christ, and it closed the trading session at $66.30. Guys, very ugly looking chart. You guys can see that AMD is dealing with a major downtrend below all the moving averages. We have declining moving averages, and most importantly, AMD closed today's trading session below VWAP, and we have a declining 5-day moving average. So we might still see more downside. We can make the case in favor of the bulls that AMD is a bit oversold. You guys can see the RSI sitting at 21 points. So I am going to pull up here the 3-year chart. On the 4-hour chart, we cannot see any support, any potential support for AMD. So I'm thinking, guys, that if AMD keeps on dropping, which might be the case, we had a very ugly close today. The next important support, and this is something that I discussed about with Mario yesterday. The next support is $60, guys. $60 is going to be a very tough spot for the bears, because we are talking about a resistance um, on which AMD failed on multiple occasions back in 2020. So we are talking about a former resistance that was broken to the upside and that now is going to act as support. Keep in mind that when resistances are broken to the upside, they act like a new support. And on the flip side, when a support is breaking to the downside, they start to act as a new resistance. So this might be the next spot for AMD. I am holding the bag. I purchased 150 shares at 72 bucks. So I am holding the bag over here. I am not concerned. I am not going to add more shares. Mind you guys, I tried to catch the bottom over here, but I I am I am going to strongly recommend to you guys not to average down with downtrends, on downtrends. You guys have to keep in mind. So in my case, I purchased 150 shares of AMD. Obviously, this is the stock that I like a lot. I think that 72 bucks long-term wise is a good price, but I am not going to be chasing a downtrend. So if you think that as of now, there are good prices out there, we have some good prices, maybe Meta, AMD, Nvidia, or and so forth. But if you happen to buy the dip and the stock keeps on dropping, you have two options. One, apply a stop loss, get out of there, and that's it. Move on, or try to catch a lower price, or not adding more shares. Do not average down on losing positions, guys. Please, that's a losing strategy. Don't do it. I am telling you this because of my own experience. I have suffered a lot because of this. So in the case of AMD, I am holding the bag and I am going to wait until I see buyers stepping in before I add more shares to the position that I have. Let me take a look, by the way, at the market structure of AMD. So what is the market structure of AMD looking like? Supply versus demand. This is very important, guys. Let me take a look at AMD over here. So let me see. 1 out of 10. Take a look at these, guys. The market structure sentiment, 1 out of 10. We have a non existent demand and a supply that is above the demand. So, from a market structure standpoint, I think that AMD has an appointment with 60 bucks, which is an area to purchase shares. In my case, since I already purchased shares, I might be considering buying a leap. Could be a call option that expires maybe in 2024. I think we already have options that expire in 2025. So that might be a trade that I might be thinking about if AMD happens to hit $60 per share. Very ugly looking share. Have you done SPY yet? I just logged in. No, I haven't. Let me go over the SPY. Guys, keep in mind, history is knocking at our door. Why? Well, if in the case of the S&P 500 and the SPY, if we happen to hit the low of June, this is going to be a historic event, never seen before. What's that event? So a bear market that hits a bottom, then we see a rally or a relief rally or a bear market rally, from which the S&P 500 and the SPY recovered more than 50% of the loss from all-time high, and then we hit or we break the previous low. That is something that has never ever happened before. So if the support of 363.17 happens to be broken to the downside, we're going to be standing in front of a historic event that has never ever happened before. The SPY is absolutely broken from a technical standpoint, so sellers are obviously in total control of the SPY and the S&P 500 for that matter, declining 200-day moving average, declining 100-day moving average. We also can see over here a death cross with the 50 SMA crossing below the 180 SMA on the 4-hour share, declining 5-day moving average. However, I'm thinking that since the RSI on the 4-hour share is a bit low, 26 points, what happens, guys, if tomorrow we happen to hit the low of June, 362.17, and if we happen to see over here a double bottom, maybe the SPY could bounce back up from this area, 362.60. However, if this support happens to be broken to the downside, I actually day traded put options of the SPY today on 2 occasions. So if this support happens to be broken to the downside, maybe, and this is something that I discussed with Mario last night, what about 334 points? 300, 340, 340 points could be, or 340 bucks in this case for the SPY. This is the COVID-19 crash previous high, or the high previous that the S&P 500 hit before the COVID-19 crash. So we have a huge leg down over here that could be potentially taking the S&P 500 6% lower. So can we buy puts like right away? You have to be careful. As of now, we have a very high short interest on the S&P 500 and the SPY, and we are a bit oversold. So you guys know that I am pointing out areas of support and resistance throughout the trading session in the main chat. So try to monitor the stuff that I am calling out, that Mario is calling out, and don't go 100% inputs because we are a bit oversold and we are due for a relief rally. But on the flip side, I already told you guys that this is the worst week of the year for the bulls. So watch out if this report happens to be taken out by the bears, because yes, we have more room to the downside. In the short term, the bulls failed today at $366. This is going to be an important spot for tomorrow's trading session, either as resistance or support. This is the pivot that I use today in order to buy puts. So above $366, the bulls might be starting to gain control of the S&P 500 or the SPY in minor time frames, and below 366 bucks, or if we happen to see any test of 366 bucks, so any unsuccessful test of 366 bucks might be opening an opportunity in order to buy puts of the SPY. There you go. What else? Hi, sorry, I just got the notification. No worries. You're already here. So it's a difficult year to trade. Agreed. Very tough year to trade. Yeah, I was swinging AMD down to 62, but took my profits instead. That's fine. Profit is profit, guys. Um, in my case, I am posting the screenshots of the trades that I am closing in my channel, and I am closing my trades very quickly, guys. This is a very violent market. So 1 minute, at some point, you can have a 400 buck profit, and 10 minutes after that, you're losing. You have a losing trade. This is a very violent market, guys. So profit is profit, and no one has never ever gone bankrupt by locking in a profit. So keep that in mind, guys. This is a bear market, and bear markets are very but very violent. Beans, my friend OJ. Let's go over and take a look at beans. I'm surprised that you guys aren't asking about Tesla or Apple. That's surprising. Okay. Beans. It went up today. How about that, guys? Very nasty day. Goes up 0.97% and closed the trading session at $22.81. So the bulls closed today above VWAP, but below the 5-day moving average, which, by the way, has a declining position. So this is not a good sign for the bulls over here. Watch out for $23.50 5-day moving average. You guys know that the 5 DMA is the moving average that tells us who is in control when it comes to sellers and buyers in minor time frames. So this is a very important moving average when it comes to taking short-term trades. So I'm thinking, and since the bulls were able to close the trading session today above VWAP, I'm thinking that if the bulls can take out the 5-day moving average near $23.45, they could be potentially being able to fill the next important gap up to 25 bucks. 25 bucks is a previous resistance back from mid-August, also back from early August, and also back from early May. If we were able to take this trade with the stock of this company bursting above $23.40 and up to $24.67, this would be a 5% profit. This is an acceptable looking short, guys. We have some sort of an uptrending channel over here, and we are above the 100-day moving average. Bulls closed the trading session today above the 180 SMA on the 4-hour short. RSI at 40 points on the 4-hour. So this is a decent short relative to most of the shorts that we have available out there. Let me take a look at the market structure of Pinterest. So what do I have over here? Let me see. And take a look. So the market structure sentiment, 8 out of 10, and we have a demand that is falling, but that is yet still above the supply. So I think that we might see $24.70 or 25 bucks ish coming up for interest. Okay. I wasn't to ask about Apple and also Amazon. Google just says I was going to ask. Yeah, let's do it. Let's go over. Yes, please. Tesla and Apple. Valdra Bora. Okay, let's go ahead and take a look at Tesla and Apple. Okay. And mind you guys, I got Tesla calls today. Full disclosure, I'm thinking about a relief rally anytime soon. So Tesla and Apple basically saved the day today. Tesla goes up 0.25% and closed the trading session at $276.01. So this is also something that I discussed with Mario last night. So 265 bucks is a very important spot, guys, in case that tomorrow we see a massive bloodbath in the markets. Watch out for any visit of Tesla down to 265 bucks. 265 bucks is a previous support that coincides with the 100-day moving average, a very important spot. So check this out. 265 bucks already acted as support back in late August, and this is also previous support back from early March and also back from late January. So I'm thinking that since we have the convergence of a previous support with a very important moving average, such as the 100 DMA, this is a spot in which Tesla is very likely, I would say, to come across with buyers, 263 bucks. However, in my case, I'm thinking that if the bulls of Tesla, because I purchased call options today, I'm thinking that if the bulls of Tesla can take out 280 bucks, 280 bucks is a previous support back from early August, and this is also a previous support back from early May. I'm thinking that they might be able to fill the next important gap up to the 5 DMA, 5-day moving average near 289 bucks. So if I am able to take this trade in a successful way from 280 bucks up to $290, this would be a 4% profit. So when it comes to the technical short, this is kind of an acceptable short. As of now, the bulls of Tesla are below a declining 200-day moving average and also a declining 5-day moving average. So that's obviously in favor of the bears. But despite the fact that they are below those moving averages, they are above the 100-day moving average, and we have the RSI, the Relative Strength Index, sitting at 32 points. So I'm thinking that if we happen to see a turnaround Tuesday, Tesla has a fair shot of taking out 280 bucks and fill the next important gap up to $289. And watch out for 264 bucks. Let me take a look at the market structure of Tesla before going over Apple. So this is very important, guys. Remember, supply and demand. That's what makes a market. So who is in control of the tape? Sellers, the sellers, or the buyers? In the case of Tesla, we have an encouraging market structure, guys. The market structure sentiment is at 8 out of 10. We have a fall in demand, but yet still the demand is way above the supply. So that's a good looking market structure for Tesla. Let me go over Apple over here. Let me see. I am shorting Apple, guys. Full disclosure. I am shorting 200 shares of Apple. This is some sort of hedge. And I'm thinking, I'm not going to say that I am convinced about it, but I think that Apple has an appointment with lower prices. So Apple went up today 0.23% and it closed at $150.77. So as of now, the bulls are failing and failing and failing at the 5 DMA or 5-day moving average near 152 bucks. This is a very important spot for Apple. Be careful with the 100-day moving average, guys. 152 bucks. So if Apple, let's say that Apple opens the trading session tomorrow below this 100-day moving average near 152 bucks. Keep in mind that the 5-day moving average is sitting at 153 bucks. Okay, so Apple opens the trading session below 152 bucks. Keep a close watch on this moving average, guys. This is a very important moving average. If Apple fails at 152 bucks, then you guys could be buying puts in order to ride Apple down to 148 bucks, which is a previous support back from September 23rd, and also a previous support back from September 15th. So this might be a short if the bulls of Apple happened to fail at 152 bucks. However, on the flip side, if Apple opens above 152 bucks and if it starts to consolidate slightly above that area, watch out for another push to the upside, because in that case, we have unfinished business at 155 bucks. I hope for Apple not to get done with this business because I am shorting it. So 155 bucks happens to be a previous support back from late January. RSI of Apple at 41 points. So Apple is neither oversold nor overbought. So the stock of this company could be going either way. Now let me take a look at the market structure of good Apple. Let me see AAPL. There you go. Yeah, what is this market structure looking like? Let me see. There you go. 5 out of 10. And as of now, we have a steady demand that is above the supply. So it's an acceptable market structure for Apple. So watch out for this 100-day moving average at $152 per share. What's up, bro? Codigin. There you go. Okay, so what else do I have here? Amazon. Cape Cod Mama. Let me take a look at Amazon. Do I have any other request over here? Let me see. Can you post those DXY and Treasury yield numbers? We should be looking out for daily on the Discord. Absolutely, yeah. I am. Isaac is asking. He's telling me. I am usually, guys. Telling you on Discord about the DXY and the 10-year Treasury yield. Um, One of the most important aspects, guys, that you need to consider in order to be successful traders is getting familiar with the mechanics of the markets. So you shouldn't be taking trades without monitoring the VIX, the DXY, we say the DXY, the DXY, and the 10-year Treasury yield. Okay, that's very important. So if you're going to go long on any given stock, when the DXY and the 10-year Treasury yield are pulling back, then that's a good sign. And mind you, in the case of the 10-year Treasury yield, that's a very tricky index, right? Because the 10-year Treasury yield above 3% is very negative for the markets. However, there's a level, guys, when it comes to TNX or the 10-year Treasury yield. I'm going to pull it up here again. So there's a level for TNX that is very healthy for the markets. So if TNX is somewhere between 2.3% up to 2.7%, that's a very healthy area for TNX to be located at. So if you see the 10-year Treasury yield sitting, as I just told you, sitting between 2.3, 2.7%, then that's a green flag to take any given trade. However, so um, if the 10-year Treasury yield is above 3%, that's very bad news from an inflation standpoint. That implies that we are dealing with inflation pressures, and that implies that the Fed is going to be very aggressive when it comes to its monetary policy, which obviously puts downwards pressure over most of the indices and stocks out there. However, on the flip side, if the 10-year Treasury yield breaks 2.3% to the downside, then that's a whole different story. That implies that the economy is weakening and that we might be entering into a recession, which is also negative for the markets. So the TNX is a tricky one. It requires some sort of balance between 2.7% and 2.3% up to 2.7%. And in the case of the DIX, we just need to. It is so overextended over here, guys, that we just need to see it going lower, right? And I just told you the magic number for the Dixie. Put it down on a sticky note, guys. So mark my words. The Dixie takes out 113 bucks to the downside. We might be seeing a turnaround Tuesday. Okay, Amazon. What is going on in the case of Amazing Amazon? Let me take a look at Amazing Amazon over here. Goes up today 1.20%. As I just told you guys, Amazon, Tesla, and Apple saved the day today. I mean, they didn't save the day because we actually had a red day across the board, but it could have been worse. Let's just put it that way. So in the case of Amazon, the bulls failed. Check these guys. I have been telling you guys about the 5 DMA, the 5-day moving average. So Amazon failed today right at the 5-day moving average, 117 bucks. So you guys know, let's say ahead of time for tomorrow's trading session that this spot is going to be very, but very critical, 117 bucks. So Amazon takes out 117 bucks. We have room up to the 100-day moving average near 121 bucks. If we were able to take this trade, this would be a momentum trade with Amazon breaking out from 117 bucks up to 120 bucks. This would be a 3% trade. However, if Amazon happens to push higher tomorrow and the bulls fail once again at bursting above 117 bucks, put options, baby. There you go. Because in that case, Amazon could be retracing down to 112 bucks, which happens to be a previous support back from late September. Another very ugly looking chart. As of now, Amazon is in a major downtrend below all the moving averages. We have a decline in 200-day moving average, 100-day moving average, 5-day moving average. We can also see over here a death cross with the 50 SMA crossing below the 180 SMA. Be careful, guys. Very ugly looking chart. So if you're going to take a trade on Amazon, you'd better place a stop loss. You need to manage your risk. Let me take a look at the sellers and the buyers of Amazon. Who is in control here? Let's go ahead and take a look at the market structure of Amazon. Okay, ooh, terrible market structure sentiment, guys. 1 out of 10. We have a fall in supply, also, sorry, a fall in demand, also a fall in supply. But as you guys can see over here, the supply is way above the demand. So, oh boy, is Amazon going to do visit the 112 bucks? What happens if Amazon takes out 112 bucks? 106 bucks could be coming up for amazing Amazon. So another very ugly looking shirt, no doubt about it. Cameron Moses says Amazon announced another Prime Day. Did they today? I don't know. And face, if you have time for more, absolutely. Let's go. I think that yeah, we're almost. I think that what 40 minutes in. We are 36 minutes in. Okay, let's wrap it up with Enphase, guys. There you go. Let me take a look. Let me take a look at Enphase. Remember, guys, I am going to be live streaming for you guys once again on Thursday. So remember, 4:40 p.m. on Mondays and Thursdays as well. Enphase goes down today 1.64%. This is a stock that I know to the letter, guys. It goes down today 1.64%, and it closed the trading session at $274.92. So this is a very critical spot. This is another stock that I went over last night with Mario. So 270 bucks, guys. I'm thinking that if the Burr, sorry, are able to take out $270, oh boy, and obviously if this situation happens to coincide with a further drop of the major indices, we have a huge leg down, guys. But I mean huge leg down to $220. So this is my plan. This is an easy one, guys. Any visit to 270 bucks, if I happen to confirm from a technical standpoint that this area is providing support, we are talking about a former support back from last Friday. We are also talking about a former support back from early August. So this is a long, in my opinion, if we happen to confirm support over here. However, if this support of 270 bucks happens to be taken out on good volume, I might be considering puts because we have a huge leg down over here, down to $220. Another possible scenario, a visit down to 270 bucks. Enphase starts to consolidate slightly above this area. Then we have a leg up to $290, 5-day moving average. This would be a trade that would leave us a 6% profit, give or take. So the buyers are still in control of Enphase. This is a clear uptrend. Enphase is above a rising 200-day moving average, rising 100-day moving average. However, we are seeing, remember, the 5-day moving average, guys. This is a very important moving average. The 5-day moving average tells us who is in control of any given technical chart in minor time frames. And remember, any trend change starts from minor time frames. So yes, we are in an uptrend above the 200-day moving average, 100-day moving average. These two moving averages are rising, which is very favorable. This is a very good looking chart. However, the sellers might be starting to take control of Enphase because we have a decline in 5-day moving average. So 270 bucks is a critical spot for Enphase over here. And let me take a look at the market structure of Enphase before I wrap it up. So who's in control here? Buyers or sellers? Let me take a look, guys. So the market, I might be grabbing puts tomorrow, guys. Take a look at the market structural sentiment 4.2 out of 10. And we have a collapse in demand, and the supply is about to cross above the demand. So, this is the perfect recipe for a short position on end phase, 270 bucks. So keep a close watch on that level on end phase. And with end phase energy, guys, I am going to wrap it up. Thank you very much for joining me today. And remember, I'm going to be live streaming for you on Mondays and Thursdays. So stay safe out there and see you guys on next Thursday. Thank you very much. Okay. Take care. Enjoy the rest of your day, guys. Bye bye. Take care.